Today in the grain market, corn was steady with futures making a new high at 543 and a half. Corn is now the new leader of the pack. From a new low on Monday to a new high today just tells you how strong the market is. So any uncertainty that the rally might be over is pretty much on the back burner. We've had big sales to China also adding to the bullish news. Now there's talk that the objective for corn is going to be somewhere possibly $7 range. That's a lot to take in. Now the 25 delta risk reversal is at 3.25 with the calls over the puts. That really indicates that the market is kind of like leaning towards the upside. We've got the $5 puts that has the most activity, and that just shows that traders are comfortable about rolling up their risk management on the downside right now. We had 10,000 contracts trading that, so I think that there's a lot to be said about these markets. Now in soybeans, it was firm. The rains in Brazil kind of stopped the rally a little bit. The futures did get up to 13.94 before the pullback, so that just lets you know that the market still has some room to run here. The higher prices may spark rationing of demand, because if there's any problem in South America, it could put our carryout, it could drop our carryout down to zero, even for corn and beans. I mean, yikes, we haven't even been there, anything like that. With option volatility at 27.5%, while it was a little bit lower, it is really strong overall, considering that the open interest in soybeans is at a whopping 400,000 contracts. That's the highest it's ever been. Now, the activity in the $14 and $15 calls is the highest that's been trading right now. It just tells you that the market is really starting to press upward. Now, the analysts also are talking about soybeans. Their objective could be around the $16 mark. So that just gives you an idea of why some of these options are really starting to trade up. Now, wheat was a little bit lower. Futures just started out higher, but then it kind of fizzled out. But not to worry, though. The range did hold a higher high and a higher low. That really just tells us that the uptrend is still intact. Now, we do know that there's still plenty of wheat around, and so that's why the market is really kind of getting overflow buying from corn and soybeans. So that's what's really carrying the market. Now, in options, the March and May spread is really coming into play right now, with the option volatility in March at 33.5% and May at 32%. This is really high, and it just indicates the volatility and the big market swings that we've been having in wheat. And with that kind of high volatility, we expect it to continue going forward.